Good morning, everybody. Welcome back. Hopefully, you've had a very nice week. This is December 20th, 2024. Just the last trading day before the Christmas holiday, at least for me. I'm going to take a week off or so after this. But this is Friday, December 20th, 2024. And right now, we are looking at the NASDAQ futures in the March contract, the M Micro NQH, which stands for the March contracts of 2025. So MNQH5, which stands for the Micro NASDAQ March expiration 25 contracts of the futures. Rolled over from the December contracts Wednesday. I think today is actually the last day for the December contracts, but I don't want to actually collect on any of those, so I am rolling to the March contracts. I am trading with two $25,000 Apex accounts that I passed. If you want to see a video on how I passed those, I can make those. But basically the concept is this. A $25,000 funded trading account is one where you set up an evaluation. You have to show a $1,500 profit without losing $1,500. And I did that twice, so I have two accounts here. And I'm doing a copy trade. So you can see within Trade of 8, I have account 1, which is at 25,309, and account 2, which is 25,266. These are both PA accounts, meaning they're not evaluation accounts. They're not EA accounts. They're PA accounts. So I passed the evaluation already, and we are going to be copy trading with these two today. And once I get them above 26,600, I'm going to be making my first withdrawals from these two accounts for $500 each. So I will pocket $1,000 and I'll still have a $1,000 buffer in there. If you want to learn more about funded trading platforms, just stay tuned onto this channel. I'm going to talk a whole bunch more about it. But the short version to all this is I'm going to be putting links in the description below eventually that you can check out. And if you want to try to become a funded trader, it's an option for you. If you do use the link, you would be supporting the channel and helping me out. But it really is the best way to get into futures contracts because you can get on there for $15 to $30, set up an evaluation account, trade, and if you fail, you only lose the $15 or $30 for the evaluation account that you put in. If you go in there and you actually trade with your own money, you could lose the $1,500 of your own money. So you have a lot of wiggle room when it comes to figuring stuff out if you do a funded trading platform versus using your own money if you're just getting started out. I also trade with my own money, but primarily I like the lack of emotional connection I have when I trade with a funded account because it's not all just my money. So I can take a little bit more of a step back, less emotional stance to my trades, and I get in and get out better. So I end up making money usually with these accounts better than I do with my own accounts, at least on a larger scale. So right now with the copy trading, we have them set up to be grouped together. And I'm going to be doing 10 contracts, which is 5 contracts per account. So it's basically half of a mini contract. If you're not familiar with all that, basically the mini contracts are 10x this. So 10 of these contracts, 5 per contract or 5 per account, 5 and 5 it'll split. It means I'm trading half the volume of a mini. So I have some wiggle room. I also like doing that primarily because when I get into a position that starts moving out, I will scale down and I'll sell half of my position and I'll put an auto break even on it. And that allows me to take some profits and let runners happen. Whereas if I just had one contract on the table with a mini instead of a micro, I can't scale out of a position. I only have one contract. So this gives me the flexibility to do a little bit more of the in and out kind of technique that I like to do when I trade. Let some runners run, take some profits when you can, and kind of see what you can get out of the market. This morning, we had some major news at 8:30. Consumer price expenditures came out. They were all lower than expected, so the market kind of shot up. We are in a downtrend right now. We have broken it here. You can see if I scale out. We were in a downtrend channel. Right down here and right down here. We have broken it, so that is good. It was right down this line, and we broke it when it crossed right here, and it supported off of there. So I think today might be an up day. I'm thinking target once the market opens here in 8 minutes because it's kind of doing a bounce around here. If it bounces down here at around 194, I'm going to take a long position and hopefully ride it up to the 298. That would be almost 100 points. That'd be awesome. You can also expect maybe a day high all the way up here. I don't know. We'll see. But now that we've broken this consolidation channel, the downward trend, anything's on the table. So we're just going to see what the market does. We're not going to try to anticipate it or do anything. But that's my target. I'm thinking long off the 194s up to this maybe 298s, 300 level. And if it doesn't, maybe it pulls back down, then we'll go down to the short position. We'll let it ride down here because there's a channel you can see all the way across down here that it was going to, and this is the low part of the channel as well. So we'll keep an eye on that, and we'll see which way the market goes when the market opens in, 7 minutes now. Looking at news that is coming out the rest of the day. We have the University of Michigan sediment final at 10 o'clock and the Eurozone Consumer Confidence Flash at 10 o'clock. Those are the last two big things coming. And then after that, nothing crazy. Nothing crazy. So that'll be kind of the last little bit of information we get. So today, we could see a little bit of a bounce back. The markets have been quite oversold since the Fed cut the interest rates on Wednesday. They went from 4.75% down to 4.5%. And in doing so, they really cut everything back. They really caused the market to pull back because not that they cut the interest rates. It was because they said in their forecast that they're not going to do a bunch of interest rates cuts next year. They said they're probably only going to do 2 of them. And when they did that, they caused the market to go into a little bit of a sell-off. And so now here we are kind of out of a low point and hopefully retracing a little bit and making some money on the uptrend would be the way to go, in my opinion, today. So that's why I'm thinking maybe pulling this long position off. But we'll see. We'll see. Got about 5 minutes to open. All right. All right, sorry, I had to answer some stuff there. Okay, so looking for the long positions today. We're in a consolidation pattern. If this holds support, again, around that 194 mark, we're going to be taking the long position here today. Let me put that link in the chat box for anybody that wants it. For Apex Funded Trading, it is my preferred platform just because they do have a lot of stability in the marketplace. Let's see here. Where is my affiliate link for y'all to put in here? If you use this, you'll get a coupon code. You'll get to save some money. All right, here we go. Here we go. Put this in the chat for you guys if you are interested. Check it out. It'll give you a discount. It'll give you the code automatically, so you'll be able to get in there and get traded or get funded potentially. But you can do a 50K account, 25K account, whatever you want. I did 2 of these 25K accounts, $1,500 profit target, $1,500 trailing drawdown, And yeah, I have 2 of them. So I trade with 50K in these 2 accounts. All right, looks like we're moving upwards. I like this momentum. I like an entry a little lower on my TradingView chart over here. Looks like we have a delta volume of 42% to the buy side. So things are looking good right now to the upside. But market opens here in 2.5 minutes. I don't like taking positions just before market open for exact reasons like that red candle right there. As soon as a bunch of liquidity comes into the marketplace where General Joes can get in here and liquidate positions or make positions on intraday trading margins, things change a little bit. What I typically like to do is wait for the first 5-minute candle to show itself and wait to a breakout or above or below. Wait for it to retest the high or low of the first 5-minute candle, and that usually will give you a direction, at least for a little while, the first half hour of the market. So right now, if you look at this, our target is to wait till 9:35, about right out here, see where the market is, and see if it comes in. So let's just say it has a big red candle down, okay? This is the high, this is the low. Now we're waiting for it to come outside of that candle in the next candle and retest that low, and then it will continue down, or just the opposite. If this is the high, we'll wait for it to break out, come back down, retest, and then that tells us that we're going to have a continuation to the upside. That is my edge. It's not a secret. A lot of people trade that specific strategy. I'm just telling you what I look for. It's not financial advice. It's what I do with my money. If you choose to do it, take that at your own risk. I'm not telling you to do it. That is just how I go about looking for trades. So right now, just waiting for the market to open. We got 55 seconds left before market open. Got my contract spooled up. I also have the regular NQ over here. Again, I don't trade that as much. And then I have the the S&P 500 over here as well. I'm not currently in the zone with that, so I don't even know what to look for there. I'm not going to bother. We are just going to be trading the micro NASDAQ futures for March today. All right, market opens in 25 seconds. Yeah, U.S. consumer spending came in lower than expected. Traders futures keep bets on Fed pause in January and add bets to a rate cut in March with one more seen in October. That is what people are thinking, according to financialjuice.com. Not sure why the lights are blinking in my office, but they are. Okay, market just opened. Let's see what we got here. Not a lot of movement, surprisingly. I thought there would be a big candle right off the gate, or right out of the gate. Let's see. Okay, there's a little bit of a pull down. It's hitting a support area where I may take a long position. Yep, it's bouncing. Kind of thought that might happen. I want to put a long position right here on 94. 94.25. All right, we got a position for 5 contracts in each of my 2 accounts, 10 contracts total, for 21,194. And the target would be right up here. The sell target would be, 228, something like that. Let's see what we're working with. I haven't been filled yet. Been close. I expect just a little kiss on that and then a bounce back up if it does get filled. If it rips down to the bottom, we'll be exiting that position with about a 10-point loss. Not filled yet. No clear direction yet.
Order filled.
Filled. This is where I expect it to bounce. If not, we're out of the position. Bounce is happening. Looking good. Looking good.
Order filled.
I didn't like it. Came back and retested. Could have taken it a little higher around 208. Yeah, there it goes. Okay. Yeah, I exited that one a little early, but that is simply because within Trade-O-Vate, I don't have the ability like I do over here in my TradingView setup to put in these automatic orders, the advanced order tickets that you can. For some reason in the Trade-O-Vate system, when you do trade copying, it doesn't let you do advanced order routing, which is frustrating. But I'm up $154 on the day so far. So that's good. And that's across 2 accounts. So I'm up $308. Easy peasy, right? Still at a 16% delta volume to the buy side, according to my TradingView buy indicator. Still waiting for a breakout to the up or down to see where the general direction of the day might be. This is just consolidation chop almost. You can play the bounces, but then if you get caught in a breakout, boy, do you get hammered. Let's see where I'm at on that trade. So today I've had $11 winner, 77, 17, 27, 20, 25. So, all right, cool. 100% win rate, that's not normal. Usually I'm about 70, 80. But, hey, I'll take a 100% win rate on a day. That's awesome. There's a good bounce right there. Again, that 194 kind of holding. This may be the breaking point for it. Let's see. It's showing a little bit of weakness coming in, a little more sellers coming in. RSI is close to being low, but not completely. Not completely. Let's see here. Get my RSI on the TradingView chart. I don't know why that went away. What happened here? RSI is at 51 right now on the 20 candle. Nothing crazy there. Could take a long position on this. Again, it's bouncing off that 194 pretty consistently, which is good. You can snipe little wins out of that whole thing if you wanted to. Still in consolidation pattern right now. Looks like we're bouncing off around 190. And get an entry in there. Whoops. If you can get an entry in there around 190, you could play this up to the 218. I mean, you're catching 20-point swings pretty consistently on this right now. Honestly, it's not a bad play. I'll put one down here. At 190, what is this at? 193. Yeah. Let's see here. Still bouncing. Thing I'm afraid of right here is just a big red candle swiping down. And the market would move so fast when it happens that it would just blow by any limits. Could lose $100 pretty quickly. Don't necessarily want to do that. Yeah, I mean, this is another 15-point win. Gosh, predictable. My goodness. Doesn't usually give you that kind of predictability in the marketplace. I mean, man, that's a 30-point win right there if you had taken that position. Nothing wrong with 30-point wins over and over again, right? If you can do it. Waiting for a breakout of some direction. Is this the breakout? It's the breakout or the fake out? All right, broke above a level. Now I like to see it come up here, come back down, and retest this level. And once it retests, then I would take a long position with a nice tight stop loss and see what happens in terms of the upside. In my target for the upside, if it does break this, we're looking at around the 300 mark, 290, 300. All right, so it's broken. Here comes a retest. Maybe. Not yet. Oh, it's just ripping away. It's already at 275. It's okay. When I do my trading, a lot of people ask me, when I trade, what is my mental or psychological trick to staying consistently profitable when I have winners and losers? The best thing I can tell you is read the book Trading in the Zone by Mark Douglas. Absolute game changer. It talks about the psychology, and I've been trading for several years now, and the psychology is 100% why people win and lose. It talks about euphoria. It talks about the ups and downs, the highs and lows, the mistakes people make in equity curves and everything else. I did the Audible 8-hour out loud thing when I road tripped, and it was fantastic. I highly recommend it. But back to what I was saying, you really have to think of it like you are the casino. You are the house. The house doesn't get to pick which hand of blackjack it wants to participate in. It participates in every single one without emotion. And it has an edge, a defined edge. So it knows that over the long run, it's going to win. And it's the same thing with trading. You can't get a euphoria feeling just because you have one winner, and you can't get down just because you have one loser. Even if you have a streak of 5 losers. You know your edge works, and you just have to participate in every hand. And over the course of time, you will win like a casino does. And it's the same thing in successful trading. The successful traders I know participate in everything without emotion, and they allow the hands to play out, knowing that sometimes they're going to win, sometimes they're going to lose, but their risk management and their participation in the market is consistent, and that allows them to have a slow climbing equity curve. They don't have these big swings of 40,000 up, 40,000 down. You know, they tick up 2,000, lose 500, tick up 2,000, lose 500, things like that. So the risk to reward is consistent. That allows them to be profitable. As I'm saying all that, looks like we hit my target of around 300 without any kind of pullback. Now we're getting a pullback, but it hit 300 much faster than I thought it would. That's okay. It didn't do my retest, but again, I'm happy to see that I'm able to predict the market somewhat. I didn't need a retest or see a retest. I needed a retest to take my position, but my target of 300 was accurate in the market. That tells me that I am reading what the other participants in the market are thinking as well, that around 300, it's going to do a little bit of a reversal. Now here we're getting a retest of this candle, this second candle, this 930 to 940 candle. If it does that, this continuation could go up past that 300 level and maybe even make it up to the 338 level. So let's take a look and see how this plays out. It is doing the rubber band retracement, as I call it, where something gets extended too quickly. It likes to retrace just like a snapback of a rubber band. And that can either snap back and then continue up, or it can just snap back to a settling point and settle there for a little while. I still like the entry where I have it at the 238 mark. It may bounce right here at the bottom of this candle at the 151 mark. That's probably where I see it happening more than likely, but I'm going to have it a little lower just so that I have a little less risk on the table, a little bit higher probability, just given that this has been a better support and resistance area than just one candle. If I don't get the trade, I don't get the trade, but that's what I'm willing to put on the table. Much like in a casino environment, when casinos put odds up for anything, they're willing to risk a $25 loss to make $100, and that's the same thing I'm willing to do. I'm willing to put up $100 of risk to make $400. So that is how I trade these accounts. I have 2 of them, so every time I do it, just double it. If I put up $100, I'm saying I'm going to risk $100 per account. So it's $200 total risk to make $400 per account, $800 total. 200 risk, 800 profit. That is typically the approach that I have to these trades. As we can see, it's getting a nice bounce right off of this level. It broke through there. Okay. I still like our entry point here. If this rips down and touches where we are, we're going to be in a nice little entry. Oh, it's filling. Yep, there it goes. Filling off of that candle, much like I thought it might. That's okay, though. It's okay. We only have a delta volume of 6.98 or 7% now on this buy trend. There's 163,000 buys to 152,000 sells. So there's only 11,000 in variance there. So it's still up, but I like to consider 10% or better is a trend, 30% or better is a real trend, and you can buy into one. So we need to see a little bit more buying volume to hold this trend. This looks like it might be fizzling out just slightly. Yep, there's a nice bounce. Yeah, I mean, this is a perfect example of what I was talking about off the first 5-minute candle. This happened on the second 5-minute candle, but it comes up here, it comes back, it retests the bottom. It just barely gets it, and then it kind of pushes back up. So if you took an entry position, say here, your stop loss was down here, you would not be stopped out, and you could let this ride up, potentially all the way up there, but you can also take it here and take a quick 1-minute kind of scalp, if you will, off the table. Change that. I'm going to put this. Where is that at? 248. I'll put a buy limit right there at 248. See if it retests that. See if I can get an entry here. Like to make a little bit of money. Could do it on a single candle potentially.
Order filled.
Whoop, 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 whoop. All right, there's my We're right there where I would consider exiting. It's bouncing. If it goes below there, we're out. It's got to bounce right here. It's got to bounce.
Order filled.
Lost $100 there, and there's the bounce. A little delayed. That's okay though. It wasn't showing strength, so I think it might continue down. Where'd that loss go? Ouch, $107 loss. All right, that's okay. That was my original entry, that 237. I shouldn't have moved that up. On my trading view over here, I was thinking it was going to be maybe at 249. That's okay though. Let's see if my original trade would have worked out. I would have had that entry right where we are now. Stop loss down here at about 227. Nope, would have been stopped out there too. That's okay. All right, so we got some negative equity there. Darn. 173, 216. That's okay. Wait for the next setup. Delta volume down to 2.6%. Not great on the buy side. No major news has come out. Looks like the market's just doing a little bit of a reversal here. And there might be another good entry here. Setting up. RSI is getting a little lower. Let's see. I'm going to take
order filled.
Get a little bounce back. Here we go. There we go. There we go. There we go. Nice pullback. I love it. Keep going, baby. Keep going. I'm going to take that off the
Order
table.
filled.
All right. All I did there was look at the support and resistance levels, guys. There's been a bunch of touches down here to this level. Even if it's not a continuation of green all the way back to the simple moving average, it was a quick bounce. A lot of buyers came in. They had orders there. That allowed me to bring my profit back to the day almost like that last trade never happened. So that's good. 285, 328. Cool. Like I said, be the casino. Participate when you see it happening. Sometimes you're going to lose, sometimes you're going to win, but over the averages, if your edge works, you're going to be profitable. All right, looks like the breakdown. That is exactly why I took out. I'm sorry. That is exactly why I cashed out of my position. I didn't know if the buyers were going to be consistent enough to hold. If I was going to hold that position, I would have waited for that green candle to close and then taken another position. But that green candle shows me that the bears were in place. So this is probably going to continue down. Yep. And that's okay. I think the next level of bounce would be down here around 157 is going to be one level, and then 126 is going to be another level. So let's see. Looking at 158. This should be a support level right here for a little bit of a bounce, right where it is down here. So we're going to see a little bit of a retracement there. Whether it holds or not, if it continues down to the consolidation. Okay. Yep. Sorry, I was reading a text message and defied my own laws of take every trade. Whoopsies. That's amateur trading for you right there, boys and girls. Should have taken that trade. That would have been a nice retracement. Too late. The entry's not there for me anyways now, so we are not going to be taking that. All right, guys. Well, on that note, I'm going to end the live stream right there. My phone is blowing up. I've got personal things I got to tend to, and the market is giving me what it is giving me so far. So if you want to see future videos like this, please make sure to like and subscribe. Check out Apex Funded Trading if you want to. Tune in. I'm going to be doing these broadcasts more consistently after the new year. I thank you very much.